Things just got really interesting between Rivian and Volkswagen. Volkswagen and their subsidiary Scout Motors just announced new vehicles, and they look a lot like Rivians. They even may have some Rivian software in there. That was one of the things that really piqued my interest when the news of the Scout vehicle started to go around, was that it looked a lot like Rivian software. And that makes sense because the two have a partnership to help Volkswagen with software. You may remember earlier this year, they announced a $5 billion partnership. Now, only $1 billion of that has actually been invested in Rivian so far. And the agreement isn't fully finalized. So the other $4 billion, half of which would go to a joint venture between the two companies, half of which would be invested in Rivian, isn't a reality yet. But what we are seeing is that Volkswagen really wants to get into the electric vehicle, truck, and SUV space. And the vehicle that they're bringing to market looks like a direct competitor to Rivian, and it's coming in at a lower price point. So I want to go through everything we learned today and then how this impacts Rivian, because I think this really is a challenge for Rivian, is that they are helping Volkswagen become a better automaker, have better software, have better technology in their electric vehicles. In exchange for that, they get the money that they need to survive as a company. But you may be creating your biggest competitor by helping Volkswagen. I'm going to dig through that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the Scout vehicles first. So there were two Scout vehicles that were announced today. One is a truck, the other is an SUV. I'll put some full images up here on the screen. But the thing that really caught my eye, and this vehicle is not going to be released, initial production starting 2027. So we're a little more than 2 years at the very earliest, potentially as much as 3 years away. But look at this pricing. The Traveler vehicle expected to start at $50,000 with incentives, so potentially more like $57,500. Terra starting at $51,500 with incentives. Again, closer to $60,000. But the Traveler SUV answers a lot of the questions that Rivian answered as well. It's an SUV, lots of space for doing activities, built to be rugged. It's more of a competitor, it looks like, to the R2 rather than the R1. Looks like it's a little bit smaller, although the R1's third row, not all that spacious. So could be an option for people who are looking for that kind of a vehicle. And even the style looks a lot like Rivian. Now, it also looks like the old Scout vehicles. So don't think that Volkswagen stole the design from Rivian. Maybe more so that Rivian stole some of their designs from the original Scout. But that is, I think, what's really notable about this announcement today is that Rivian's partner is directly going after the markets that Rivian wants to grow into. And this is a huge deal because Rivian and Volkswagen, this is just in June, they announced plans for a technology platform joint venture. A lot of details here, but the original $1 billion investment has already been made in Rivian. Like I said, $4 billion expected to go into the joint venture in total, half of that to the JV, half of that to Rivian. And what Rivian is licensing with this is their technology stack, their network architecture, topology of electronic control units, the associated software platforms. They are a vertically integrated company. And that's the challenge for them, is that they're a vertically integrated company with all the costs that go along with that, but they don't have the scale to actually benefit from being vertically integrated. So what do you do in that case? Well, you can license your technology or your software or your designs to other automakers. That's what they're doing with Volkswagen. Take some of that operating cost potentially off of your income statement, put it onto the JV. But then the downside of that is you have this other partner, Volkswagen, who has different interests than you. They're going to take this technology that you're licensing to them through this joint venture, and they're going to use it to build vehicles that people want to buy. They want to grow in the electric vehicle market, and this is a great way for them to do that. Now, the challenge for Rivian is they aren't currently able to scale their own business. They recently reduced their guidance for 2024. They're only going to produce a little less than 50,000 vehicles this year. Next year, we don't have guidance for that yet, but potentially 100,000 vehicles, probably not going to be significantly more than that. Then 2026, you start moving into the range where they need to ramp up the R2. They're building out the Georgia facility. That's still not going to be operational until closer to the end of the decade. But now you're going to get competitors like the Silverado. You have the Ford F-150 Lightning. Now you have the Scout coming into the market. Who knows what else is going to come out in the meantime. On the SUV side, you have an Escalade coming out. The GM Equinox SUV is already out. So competitors are coming into this market, and Rivian is trying to scale its business and scale its sales extremely quickly. We've already seen that they have demand problems. You don't have a big line waiting to buy Rivian vehicles today. You should, with only 50,000 vehicles being produced right now. This is just going to make that challenge even worse. And so this is the kind of thing that I think Rivian knew was a huge risk when they made the deal with Volkswagen. By the way, that isn't finalized, so we don't know what the full extent of that long-term partnership or when that other $4 billion is going to end up coming in, because that is dependent on actually finalizing the joint venture. But it's very clear that Volkswagen is going to take the technology they get from Rivian, and they're going to compete directly with Rivian. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, I've been talking about this for a while on this channel, that Rivian is in big trouble because they're still burning a ton of cash and they're running out of cash. Right now, as of the end of the second quarter, so June 30th, 2024, the company had about $7.9 billion worth of cash and equivalents on the balance sheet. But the cash burn just from operations is nearly $4 billion. You're spending about $1 billion in capital expenditures per year. You got to spend about another $2.5 billion to fund the Georgia expansion. On top of that, you haven't gotten the Normal, Illinois facility, which is what should have already been scaled by now, to actually scale production. Now, management has said that by the end of this year, they're going to get much closer to profitability. That's probably going to be pushed back because of the delays that they've had in the third and fourth quarter. But these kinds of things are now existential threats for Rivian. If they are not able to ramp up their production at least to the 400,000 units that they should be able to deliver by the end of 2029. Remember, that is 5 years from now. So we're talking about really long projections. A lot can change in the auto industry in the meantime. And all we know is that between now and then, they're going to be burning through cash. So this is the huge challenge for Rivian. They need the cash from a deal like Volkswagen to survive. They just simply need it to survive. They have debt on the balance sheet. As of the end of last quarter, they had $5.5 billion worth of long-term debt. Now, $1 billion of that was part of the Volkswagen deal that would convert to equity when the actual deal is finalized. But debt markets are not going to be open for Rivian. That's just not going to happen with the amount of cash burn that they have. They're going to have to raise money with stock. They're going to have some sort of path to profitability, and a partner becoming a competitor with a vehicle that looks very similar to yours at a lower price point than you can currently offer today. And then they could potentially beat you to the market with your next generation product, with that R2 and R3 product. That is really a tough position for Rivian to be in. So again, this is a company that I think is in much dire position than a lot of investors think. Still has a $10 billion market cap. That is just an incredibly high market cap for a company that is burning cash this quickly, and I think is extremely weakly positioned in the auto market. But let me know if you think differently about Rivian. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.